Let me bring on board Vamakshi has promised to put our sense into how the valuations stack up and for the power financiers.
Well, yes, stellar moves is what we're seeing in PFC and REC today. Now, keep in mind that both of these stocks are actually perched at an all-time high today. Now, PFC and REC generally tend to move in tandem with each other, and that is because PFC owns nearly 52% stake in REC. And in fact, over the course of the last 1 year itself, we've seen stellar gains for both of these counters. PFC has managed to surge by almost 228%, while REC has gained over 236%. Now, with that, the valuations have also definitely increased for both of these counters. For PFC as well as REC, the 1 year forward price to book ratio is somewhere around 1.35 times, and when we compare it to their historical averages, for PFC it is nearly 5 standard deviations above their historical average, while for REC it is nearly 3.4 standard deviations above its historical average. So definitely the valuations have gone up significantly, and there are certain re-rating triggers that have actually played out for these counters. Both of these companies actually have very strong prospects, and in fact today itself REC announced that for the first time ever the company has crossed disbursements of almost 1 lakh crore in a year. Apart from that, the loan book for the entire group, that is PFC plus REC combined, has already crossed 9 lakh odd crores, and the management in fact expects the combined book to cross 10 lakh crore by this fiscal itself. Apart from that, the renewable energy space is also proving to be a new lending opportunity for the company. In fact, there is a push that is coming in from Government of India, and in fact in a recent interview with ET Now, IREDA, this newly listed player, also said that there was an opportunity to finance renewable energy projects of almost 12 lakh crores. And in fact, the company's balance sheets for both PFC as well as REC have also been cleaned up recently. In fact, PFC's GNPA has fallen down from 10% that we saw in FY19 to around 3.7%, while REC's GNPA peaked at around 7.24% in FY19, and it has dropped to lows of almost 3.3% in the second quarter. Apart from that, both the companies actually reported negative credit costs, and that was mainly on account of resolution of stressed assets. In fact, the management is expecting further resolutions ahead as well that could in turn propel the kind of credit quality that both of these companies have. So all in all, the fundamentals that do look resilient for both of these counters, but can the premium valuation sustain? Only time will tell.